It's a pleasure to have you all here with us. This session will be recorded. It's a huge pleasure to have this webinar joint event of CFA Spain and CFA Portugal. It's always good when we join forces and make this very relevant webinars with such interesting content. This time round, we challenged José Luis Mora, the president of CFA Spain, to share with us his experience and his view on fintechs and how specifically how Santander is looking at this issue. Let me just give you a brief introduction of José Luis Mora. It's a coincidence that we both of us work for Santander, and though in different regions and in different countries. José Luis is I was reviewing his CV. Has made his career from equity analyst, and then as a corporate development director in charge of this area. I remember, José Luis, a very long time ago, I was following your career within the bank, and I remember when you were acquiring banks all over the world.
Yes.
And then you have been accumulating more responsibilities, and now you're head of strategy and financial planning for the group, as well as CEO of the Santander Consumer division. So I think you have a wonderful experience, and to share with us this hot topic of the fintechs and how an incumbent as Santander is addressing this issue, and how it is positioning itself to deal with this challenge for the future. Just for a housekeeping announcements here. So the idea was José Luis making his presentation. He's available to take questions in the middle as well if you want to interrupt him, or in the end we'll save some. I think we'll allow for sufficient time for us to have a discussion and hopefully a very lively discussion around this topic. But as you wish, as long as we keep organized, I think we can have quite an informal exchange of views. José Luis, the floor is yours.
Thank you very much, Marcos. This is a great pleasure to have in this joint Spain-Portugal event. More than brothers, I suppose. Thank you for the nice introduction, Marcos. The idea of today's presentation is to talk a little bit about how we are looking at working, operating, buying fintechs at Banco Santander, because for banks to compete with fintechs, we have to understand them, work like them, and to some extent become a fintech. No? I understand, Olats, that you are going to show the presentation. I'm not sure if you guys are seeing it. Thank you. That's coming. That's perfect. Okay, so yeah, page 2, we are going to see basically a little bit the agenda here. So page 2, yeah, is first of all, what makes fintechs or startups in the financial sector successful? What is their advantage and what are the disadvantages? We're going to talk about that. And then the second part of that is how we work with fintech, how we leverage fintechs, how we use them into our targets, into our strategic plan. Okay, let's go to the following page. My idea is to go quick and sometimes spend some time in a few slides. Please interrupt me. We can have a discussion on certain issues and continue till the end. And in any case, I'd like to leave quite a lot of time for questions. No? So what is a fintech? Starting that, fintechs have been disruptive. So page 4 is the idea of fintechs have been disruptive. Can you go to page 5? Oh, that's fintech has been quite disruptive in the financial world. They have been disruptive in specific parts of the banking sector, the financial sector. It hasn't been a complete takeover, because a large part of the financial sector for the moment is protected because of the heavy regulation. In other words, there's not a lot of incentive for startups, for fintech, to do banking as a whole, since today, given regulation, given capital demands, is not really a great business. So fintechs are concentrated in those parts of the financial business, or the banking business, where you don't need capital, where they can operate, you don't need capital, they are not regulated, they are technology intensive rather than capital intensive, etc., etc. And the fintechs basically are leveraging and trying to do business in part of the banking sector in which they have an advantage. What are their advantages? Well, the big advantages is those 4 that you see there, and they focus generally on part of the sector which are not capital or regulatory heavy. So first of all, of course, technology focus. They concentrate in a certain technology, in different solutions, in order to solve a very specific problem. That's what it is. And within banks, we have millions of problems, and we cannot beat all startups in all the problems. So if there's a few fintechs concentrating in 10 problems, they're likely to solve that problem better than the banks, because we banks are trying to solve a million problems at the same time. So we don't have enough focus. So it's not that the banks don't have money, don't have technology, don't have good people. They have exactly that, but they don't have the focus to apply the technology into a specific problems of customer solutions, right? So number 2, the user experience. So fintechs leverage the technology to provide the best user experience. Again, can we banks provide the best user experience? Yes, but we have 1 million segments, problems, etc., where we have to apply the best customer experience. So we don't have the focus to do that across all the business. Also, fintechs, like startups, tend to work in an agile way. And an agile way basically means that they can deliver quicker. And they can deliver quicker not because the people of the banks or the legacy companies are silly or slow, lazy, or whatever. It's because the way they're organized around the legacy system imply that sometimes you have to do sequential delivery of things rather than trying to do things at the same time with a new system. So the whole environment allows fintechs to be quicker in delivering whatever solution to a certain problem with better customer experience. And then data monetization. These guys are focused on monetizing the data, using the data to produce a specific result, to solve a specific problem. We, the banks, have zillions of data, but it's scattered in different ways. It's difficult for us to use it because we have regulation limitations to do that. We are not well organized to do that. While these guys, being small, focused, technology oriented, etc., can focus on doing something with the data that adds value and makes money. And finally, they tend to focus on problem solving, businesses, segments, etc., which are not regulated and don't require too much capital. So this is basically the thinking process of fintechs. This is what they happen. A lot of people is thinking, okay, at some point there will be a super large fintechs, like let's call Amazon, that will try to replace full banks. Well, for the moment, we're not seeing that. For the moment, we banks and financial companies are suffering the attack of fintechs on a specific part of the chain, and tend to be that the attack is the most profitable part of the chain, of course, because that's where the money is. Okay, so that's more or less where they operate and how they operate, and these are the key advantages. And we, the banks, are trying to do the same within our own organization, which are much more complex and big, etc. And we go to the page 6 now, lads. And page 6. Can you go to the next? Thank you. Thank you, Lars. So the disruption, the main disruption in the financial services basically is coming in different parts. First of all, banking and lending. You'd see there that in theory, the lending startups are not really lending, are basically originating customers, offering lending of third-party people to customers that they look for. They are trying to rate clients so that they originate a loan and sell it to the bank. So they are trying to do the business of lending capital light. There are basically a lot of concentration in the payment world, because the payment world, it's basically not really regulated. It's capital light, it's technology based. It's actually the payment system in the world is based on technology of 30 or 40 years ago. So there's a lot of things to improve. And that's where a lot of the innovation is coming. Is it an impossible innovation? No, it's not especially difficult, but the banks have not had the focus to do that. So different parts of the business is suffering. For instance, one of them is merchant acquiring. So you have there on the top left, you have Adyen. So Adyen is the traditional merchant acquiring company focused on the e-commerce, which the banks haven't been focused. And now they with a Stripe, they own the e-commerce world of payments, for instance. So a lot of information services, of course. They provide services to the bank. So some of these startups, fintechs, compete with the banks. Some of these fintechs provide services for the bank, and the bank uses them and substitute their own services that they have in-house. No? Okay, let's go to page 7. A little bit of theory. This is consultant forecast. Okay, but a lot of people is saying what percentage of the revenues of banks are under threat because of fintechs, unless banks do something competitive to avoid being cannibalized. No? So retail payments, 50%. I completely agree by that. I mean, unless the banks do something, retail payments are being taken over by fintechs. Now, for instance, in Spain, the banks have made Bizum, which is a P2P among individuals to make money transfer through the mobile phone. Okay, so that's working well, but those are patched. I mean, while fintechs are attacking the whole spectrum. Retail wealth management, yeah, this is under attack through the robo-advisor. Consumer finance, well, I hope not, but the consumer finance also is under attack because it's relatively easy to provide financing needs to individuals online at the same time that these guys are buying a fridge, a TV, a car, or whatever. No? Anyway, and so on. You see that the more, let's say, corporate oriented is the service that the banks provide, the least likely to be under attack from fintechs, because corporate lending, corporate deposit, trade finance, wholesale payments, investment banking, all these things require a high level of advisory and require a tailor-made kind of product rather than a commoditized, digitally distributed product, which is the world of retail. Okay, and for the moment, sorry, just go back a second, Olad. So, and for the moment, there's a relatively good environment for fintechs to continue to attack because they have an incredible regulation advantage. So regulators have not been, for instance, considering that something like Revolut, which has been doing payments, is really a mini bank. So they have had advantage on regulation, which I think with time it will disappear. So I think regulators will come. But for the moment, they are less regulated, and also they are focusing on angles and areas of the business which are less regulated by definition. No? They're also efficient. And they generally tend to go into the fee-based business because they don't want to have a big balance sheet. No? Okay, let's go to the next. And obviously the bank is remunerating them. So look at the valuations. So look at the Stripe. Stripe is worth 95 billion. Is worth more than any European bank, with the exception of HSBC, if you still call HSBC European. Well, Klarna 45.6 is worth more than any Spanish bank except for Santander. So you see, and these are businesses that are basically not making money, or Klarna is not making money. Stripe is making some money, but not a huge amount. Revolut is not making money, etc., etc. So the market is thinking that these guys will continue to attract customers for a particular segment, and they will find a way to monetize it, those customers. Okay, go to next. Why is that? As I was saying, it's because of the exponential growth of the customer base. So having data of customers, it might be that Klarna will not make money with buy now, pay later, which, by the way, we at Santander Consumer are today competing with Klarna, and we are taking them contracts, but they are growing internationally. They are focused on just one product, and they are having a great success. Perhaps they won't be able to make money, but once you have 100 million customers in your database, perhaps you can make money doing consumer finance or providing them some kind of service that they might need. Okay, so the same thing for all those banks. Next. Well, this is basically saying that the amount of investment in the fintech sector is huge. I mean, you see the evolution. There was 20 billion in 16, 17, and suddenly we are in the 40 billion. And if you annualize 2021, it's going to be right around 90. So it's a huge amount of money going into fintech. So you could say, why someone that doesn't make money can challenge the bank and is stealing customer from bank? Well, in a way, what is happening factually is that the Wall Street or the private bank or the private equity industry is subsidizing a lot of consumers so that they move from banks to fintechs. No? So that's actually what is happening. And while the venture capital or private equity or Wall Street continues to believe in this, it will be difficult because it's unlimited amount of money willing to subsidize someone to move from Lloyds Bank into Revolut, despite that Revolut is providing a loss-making product. No? Okay, next. Well, this is the amount of fintech investing across regions. The huge amount of that is in North America, and there's a super large amount also in Brazil. Europe is second, and Asia is third. But obviously, North America concentrates that, and also quite interested to see how much investing in this is in Brazil. It makes sense because in Brazil the interest rates are higher, commissions tend to be high historically, so there's quite a lot of space for fintechs to try to attack part of the profits of the banking sector. So next, please. Well, that's...
Sí, perdón, es que no se me mueve el...
No te preocupes. Okay, we're fine. Don't worry.
Un segundito, a ver qué pasa.
Perhaps you can go back and then forward and see what happens.
Un segundo, dejar de compartir. Estamos aquí. Ahí. ¿Es esta?
Yes, it does. Okay, so this is just to show a lot of exit via SPACs or IPOs, acquisitions. So the valuations of the companies that they were not known 3 or 4 years ago has been tremendous. No, so let's go to the page 13 before talking what are fintechs, why they have success. So I was proposing a few points for discussion now, later, etc. The first one is why fintechs are not interested in becoming a bank. And if they become a bank, they get a money license or a weak license in Lithuania to operate in the rest of Europe, things like that. They always look for regulatory shortcuts, no? And the reason is that, you know, owning a bank means that you have to have a lot of capital. It means that you have a lot of regulation to comply, and it implies, and you can focus just on the fee business and not on the net interest income, liquidity management, and all that, no? So just one interesting reflection. I was talking to a friend that he's living in the UK, and he obviously has probably an account in Santander UK or in Lloyd's, and also has an account in Revolut, an account which is an e-account. Whenever you do something funny with your credit card, you know, you get a call from the bank saying, "Are you doing this purchase online? Are you doing this purchase which it looks funny, looks too high?" So there's a lot of controls for fraud, for financial crime, for anti-money laundering, no? Now, all those situations, if you have one credit card from one of those neobanks, it doesn't happen. And why is that? Because, you know, somehow the regulation, or because they don't feel that they need to spend that much money on preventing fraud, preventing anti-money laundering, etc., etc. So there's a lot of shortcuts that they can avoid by avoiding to having a license. Okay, second thing, why do fintechs need banks? Why do fintechs cooperate with banks? Well, what banks have is access to all the customers, you know, because if you get the banking, like, everyone needs a current account. Everyone needs to have their savings in a way that if you lose the money, someone pays for you, that you have a deposit guarantee fund, etc., etc. So a cooperation between banks and fintechs sometimes is good, and it's necessary and good for both sides, because fintechs can have a quick access to a large customer base, and banks have quick access to new technology and services. So sometimes there's a lot of incentives for cooperation and fintechs providing service for the banks. And that explains point 2 and point 3, by the way. So anyway, point for discussions now or later. Oh, sorry, Marcos, I see here a question from, yeah, you want to read that?
Oops, I missed that. Just a second. Do you expect new and more stringent regulations to eat away current fintech profitability?
Well,
questions from Jose Garcia.
Yes. Well, I don't see a lot of current profitability in fintech, okay? But what I would expect is more regulation into fintechs. More regulation in the fintech space. Why? Because a lot of the things they do look like very clever and very intelligent circumventing or shortcuts of banking products. Let's say, for the sake of the argument, buy now, pay later. Well, that's more or less like a card, like a credit card, a revolver credit card. You know, that's a non-regulated product, by the way. That's invented by Klarna 10 years ago, and the banks, we are copying that. I think that the regulator are going to end up saying buy now, pay later is a financial product, has to be regulated. Yes, I think that will happen. And they will lose part of the advantage. But this is a race. While that thing will be happening slowly, the fintechs, or the good fintechs, will probably accumulate a lot of customers. And perhaps some of them eventually even become banks. No? So yes, the regulation will eat up part of the advantage of the fintechs, but not immediately. It goes without saying that the banking industry is lobbying for being treated as well or as bad as the fintechs are being treated, because the bank sector argues that there's not a level playing field at the moment. No? Okay, thank you for the question anyway. Another one. What's your opinion on why so much fresh money is thrown to the fintech sector but not has any?
Why so much for...
I didn't see the end of the question.
So, but none for real bank equity. Yeah. What? Can you see it or?
I don't see it now. Yes, If you could read it, Marcos.
Yes. What's your opinion on why so much fresh money is thrown to the fintech sector, but none has any love for real bank equities given their low ROE, actual and close future?
That's working in a bank. That's a very painful question. Thank you very much. But that's the truth. That's the way it is. Actually, you could say there's a lot of money being thrown at the startups, at digital startups that are challenging established industries, because that's a way of saying to the legacy, either you transform yourself or we'll continue to fund these new companies that will eat parts of your business. No, so I think this is obviously the growth component. Now the question is if that growth component has been overvalued or is it properly valued at the moment. And I think some of the fintechs are properly valued, even though they don't make money, because the growth and the capacity and they will establish themselves, etc. You know, PayPal is properly valued, but I can imagine other payment companies that are not properly valued. But anyway, I think the whole market is betting on the digital revolution across all sectors, including the financial sectors. And in a way, is saying to the banks, either you transform yourself or you won't be able to compete with these guys. And they are paying for the growth. And I think, personally, I think the banks will have made an incredible transformation so far. It's a lot to do still. And I think nothing can substitute the trust of leaving your money in the bank, etc., etc. But parts of the revenues of the banking sector will go to the fintech, and that means that the bank will have to adjust the cost base in order to compensate for lost revenues. And there was another question I couldn't read. I don't see you see that, Marcos.
We have another question from Antonio Damião. Do you expect most of the fintechs ending up being acquired by traditional banks?
No. Some of them, some of them will not make it to any good end. Some of them will become large independent operators, and some of them might be acquired. So there will be a little bit of the three, but I wouldn't say that most of them will be acquired by the banks. They have become too expensive now for the banks, and the banks, banks' valuations are low. So the regulator asks us to have a lot of capital, so we cannot spend. I mean, as I saw before, Adyen might be worth 80 billion, 90 billion. Perhaps they make 400 million. You say, well, can a bank that is making 5 billion and is worth 30 buy Adyen? There's no way you are going to spend 100 billion for 400 million profit. No, your corporate finance book blows up. And then probably the market thinks that you are not going to be able to develop that business because you are in a different planet. No? Anyway, so that's more ISO. So I think banks will buy some specific fintechs in certain niches that help the banks to progress or fix a problem. I will give you an example within Santander. Okay, no more question for a moment. Let's go to the second part, which is how Santander leverage the fintech opportunities. Okay, so it's page 15. Thank you. So we do three things regarding digital, no? Digital startups, etc. The overall picture is that we have established, let's call them legacy banks. I don't like the word legacy, but let's call them legacy banks that we are transforming. And we are transforming from within, evolving the IT systems, reducing the cost, having everything, all the transactionality can be done online, basically all now. That was not possible 5 years ago. So I think the banks have done a huge transformation. And how we are using fintechs and the way fintechs work. With remember that the advantage of the fintechs were agile, focus, the use of data, customer, the customer journeys are great, things like that, no? So we need to absorb a lot of the good things that the fintechs do, no? So the first thing is we try to do it ourselves. So we try to do little fintechs within the bank umbrella in certain part of the business. For instance, Open Bank. I mean, Open Bank, you know, we launched Open Bank in Santander in the 90s as a telephone bank. Yeah. A lot of you won't remember, but before the digital era, it was telephone banking, what was kind of the new frontier. That eventually, with the digitalization, became a digital bank, like it is now, no? So we have an alternative digital bank with a very digital platform, born already digital, trying to compete with new digital entries. At the same time that the big legacy bank transforming itself into a more digital bank. No? We also have basically launched now PayGoNext. A little bit of explanation about PayGoNext in Santander. PayGoNext has several businesses inside, okay? But the biggest part of that business is the traditional merchant acquiring business. I'm using technical words. I'm not sure if everyone understands what is a merchant acquiring. Basically, a merchant acquiring business is the guys that get in contact the retailer or the merchant with the banks, or the client that pays with a credit or a debit card, and with a client current account, so that all the flow of money between the merchant, the client, and the bank accounts of the merchant and the client that buys with the card are connected, and all the transaction gets clear. That's a simple technology in the old world, but now merchant acquirers also has to happen in digital merchants, meaning e-commerce, and that's not so easy. But anyway, our merchant acquiring, we had merchant acquiring in Brazil, in Spain, in Mexico, in several countries. So instead of having one in every country with a different local platform in every country, we built a global platform that provides service to all countries, and that platform is digital, online, and adapted to e-commerce. No, so in a way, we are trying to create something similar to Adyen and Stripe, but based on local banks with a wide distribution with merchants. Okay, so that's more or less the idea. So we're trying to do these things within the scope of business of the bank. You could see that they do on digital banking. They do all that. We try to operate in the world of payments, which is where a lot of fintechs tend to operate, etc. Now, it requires that we banks, or at least part of our banking organization, work as fintechs do. No, and we have cultural transformation to do, etc., etc. Well, that's one way that we try to emulate fintechs. So create fintechs inside ourselves. The other thing is sometimes we partner with fintechs. And we, for instance, we have been partnering with Cabbage to provide rating and specialized lending to SMEs, because they do a good credit analytics, specialized for SMEs that don't have enough data to be bankable, let's put it that way. We also have been working with Ripple for cryptocurrencies. And we have set up also our venture capital for fintechs, which is called Moro Capital. It's Moro Capital. We put money, I think it has now 400 million under management, and they buy stakes in different startups or fintechs that are interesting per se as a good investment, but are also interesting because they could be partnering with the bank to solve certain problems within the bank in order to provide better service to our customers. Okay, so it has the two angles: investing plus solving problems in the bank. So we might buy 5% in a fintech, hope to make a good investment, and use that relationship in order to make a partnership between the bank and the fintech. And finally, we sometimes do acquisition of fintechs because we think there are good opportunities. Oh, and I have two examples, which are Ebury and Wirecard. I think in the following pages, I will explain a little bit more about that. So let's go to next. I think I explained more or less the open bank thing. Let's go to the 17 PagoNext. I think I more or less describe. hold a second here in PagoNext, because PagoNext, I described what is the merchant acquiring, but we have more business within the scope of PagoNext. We also have something that we call Super Digital, which it was born in Brazil, which is like which is providing banking service to unbankable customers. So generally below the average customers, in terms of they are not very poor, they have very little banking needs. They are probably non-bankable in a Brazilian context, but we provide simple banking services from non-bank. So something like a Revolut in Brazil, no? Something like that. We also have trade finance solutions for merchants across the world, etc., etc. No? That's the PagoNext umbrella. Let's go to page 19, which we explain a little bit of the Moro, which I did it a little bit quickly. So what these guys do within Santander is to invest tickets up to 15 million per startup, and they are investing worldwide. And we try to have a good relationship with these companies that we are partners and use them. Sometimes we make a lot of money and we don't use them and they become giants. So we have got a few good opportunities here, and we have missed great opportunities here too. But anyway, that's a good angle to know and include. Look at the page 20, which is a few. For instance, iSettle was a company in which we had a partner. We had a stake. We didn't find, because culturally we didn't fit well. It was our fault. We should have worked with iSettle. Finally, it was acquired by PayPal and we lost an opportunity, but we made money. So sometimes we only make money, sometimes we make money and we partner. So here are a few. Here you have, for instance, you have Clicalia, which is a Spanish company that is doing digital buying and selling of homes. That is doing very well, and it's connected with our mortgage business. We have Creditas, for instance, in the lending side, which has been a big thing in Brazil in terms of credit. So you have here a lot of interesting things. And finally, if we go to, well, page 21, you see a few of the comments about what's our cooperation between Moro, Banco Santander, and the fintechs, but that's not too much. And then if we go to page 22, just telling a little bit to you how we operate in the acquisition of fintechs. Okay, on the left-hand side, you have our traditional M&A criteria to acquire normal companies, normal financial banks, etc. Which is obviously you need to have a strategic fit. You need to no later than 3 years have to have your cost of capital, your return on investment above your cost of equity, and you have to no later than 3 years has a positive EPS. Okay, you have to comply with the three. That's traditional M&A. If we would apply those three criteria to fintechs, we would never buy anything, because a strategy can always be discussed, because the return on investment will not meet our cost of equity before 10 years, perhaps, and because in terms of EPS is always negative. Okay, so financially, buying fintechs is not the reason why we do that. What we do that is the reason why we do that is the strategic fit in the long term, and accelerate capacity to accelerate the digitalization process of transformation of the bank. And we tend to at least ask for a 6-year period, so try to break even or to get to our cost of equity in 6 years. Okay, that's more or less how we make our traditional M&A criteria become adapted to the fintech world. Okay, so let's go and see a couple of cases. One has been Ebury. So Ebury was a hot topic in 2020. This is a fintech that was founded by two Spaniards in London, right? So it was the connection was a little bit funny. And this this fintech has been a fintech specialized in the forex market. So they were providing forex solution to SMEs and mid-corps across Europe. And obviously, in a way, their intent was to provide a service similar to corporate banking service in terms of forex. So you were providing to SMEs a service as sophisticated as that provided to Telefonica, for instance, but at a very cheap price, no, at the very lowest price. So they managed to develop that. So at the end, we thought that this was going to be a good idea, because financing and providing services to small and medium-sized companies is part of our DNA in Santander. Okay, so we have a great discussion about how much this was worth. They were asking 1.something billion, etc. Well, at the end of the day, we agree that rather than buying 100%, we would buy 50%. We would basically align our interests in the medium term. We would use them to grow in Europe and to grow in Latin America, and we have been since cooperating. The pandemic, the pandemic hasn't helped, but we are doing very well now again. No, so it's a good thing. So I have here a couple of questions. So Marcos, if you can read them, because I lost in my screen.
Yes. So we have the first one. First on when partnering with or investing in fintechs, what has been the biggest challenge the bank has faced?
Okay. Well, investing. Well, investing in I have been investing myself in terms of, I've been doing strategic corporate development for many years in Santander, and it's very hard to go and say, okay, I will buy something that is not going to be making money in 3 to 5 years, and it's worth $1 billion, and under traditional valuations, you never fit. I'm going to tell you how to value companies at the CFA meeting, so you know how it works. So you have to be doing cash flows discount and a high growth and a terminal value. That's very hard. That's very hard. That's from the investment point of view. And obviously on the other side, they think they own a jewel, a unique jewel. So for us, financially, you cannot understand how can you pay that. And for them, you never pay enough. No, so it's a big mindset difference. And then from partnering, it's cultural. There's a different culture. So what we have decided is whenever we buy a company like Ebury, we leave it out of the bank. We let them continue to operate as independent company within the correct connections with management of Santander, overlooking the board, with helping them to connect to our clients, etc., but separate from the structure of the bank to avoid them being contaminated by us, or by avoiding us destroying them without the intention of destroying them. Okay, and that cooperations at arm's length is what, for the moment, we think it's the way it has to work. So that was question one. And there was another question?
Yes. So how do you think traditional and vertical integrated banks can compete against very specialized monoliners startups operating in vertical markets, such as TransferWire?
Wire, it was listed.
And operating which operate in global markets.
Yeah. That's a question, because we live that every day. Okay. So for instance, let's give examples, and there are examples many places. So one advantage that have the banks is that it's a one-stop shop. So you have a good relationship with the client, and you provide a client 10 products. Now, whenever someone comes to the clients and offer only one product at a better price and a better design product with a better customer experience, it's relatively easy for a customer for that particular product to give it to someone else. And you as a bank has 10 products, and you have to be as good at 10 fintechs in 10 different verticals. No, that's actually a problem. On the other hand, You have a few advantages, like you are one-stop shop. So if you do it reasonably well, you have good chances of keeping the customer, and then you have the trust, and then you have the deposit guarantee fund, and the fact that you're not going to lose your money in the bank, and it's not going to go up, and all that. No, so that's more or less the game. But having said that, if you get the story of TransferWise, transferring money between countries, it's a vertical that these guys have killed and destroyed. What have we done? You know what we've done? We've launched a product which is called, I forgot the name, it's called PagoFX, not PagoFX, it's PagoFX. And basically we made a replica of TransferWise, which technologically is very simple. So basically what we said is, if we were having revenues of, for the sake of the argument, 10 million between the UK and Spain, in terms of Forex, people sending money and we making profits on the Forex, on the transfer for 10 million, and TransferWise basically takes it to zero, basically, because they don't charge anything, or to 1 million because their prices are too low. You can do two things, or let those clients get used to work with TransferWise, or tell those clients, listen, I have another TransferWise inside me. It's called PagoFX. I will charge you zero. So you have one advantage, that you keep the customers, and you have a disadvantage that you lose the revenues. But at least it's better to, if you don't do anything, you're going to lose the revenues anyway. So we decided to cannibalize our revenues and keep the customer with PagoFX. That's the way you can compete with them, destroying part of your revenues, cutting your arm. Now, the problem with cutting your arm is that, unlike them, you need to make money, because the market expects that you make money, and the market don't expect them to make money. So what you have to do is become efficient, cost restructuring, reducing cost via technology, etc. Now, that's basically the process that is happening in 6 or 7 verticals. Okay.
Can I just ask you one more thing? Is when partnering, you have here with Ebury a very nice example of partnering with these companies, but as you were saying, the culture is different between the two companies. Is it easy to work with and find solutions with these companies? Is there a true partnership here that is being built, and new solutions can be created within the investment period, or is it everything organized since inception of the investment?
No. I mean, as I said, culturally, we come from different planets, right? So, as I said, I think it's better to have them working separate, arm's length. It also takes people on both sides to understand each other. So a lot of these partnerships to work, it's random. It's basically a question of people. If the right people is in both sides, willing to understand and work together, it happens, and if not, it doesn't happen. That's a little bit as down to earth as that. Because the fact is, they want you're in a different planet. But at the end of the day, the best incentives to work in the world is money. If there's money for both sides, if Ebury can generate solutions for Santander that save us money, and we can share the savings with Ebury, that's a win-win. So, as everything in life, it's a question of finding win-wins. Yeah.
Okay, we have just one more question in the meantime. To what degree do you think fear of cannibalization by incumbents has opened the door for fintechs?
Of course, yeah. No, that's a fear of self-cannibalization. Yeah. But listen, for instance, there's a lot of funny games happening in this game. No, for instance. I'm going to exaggerate, so I understand there's people here in the banking industry, but just to give you a feeling. In Spain, you probably can get if you are a medium company, a small company, you probably can get a loan for 2.5%, right? Probably in Portugal the same. And we're doing that as a banking industry.
Wow.
But so that's clearly a very low price. In the US, small companies get charged 7% because that's high risk. No, in Spain, Portugal, in Europe in general, we charge a very low price for that. On the other side, whenever this small company needs to send dollars or something, we charge them 3% for the Forex, right? So with those two things, they are cross-subsidized product, we make a relatively decent investment. What happens? Well, what happens is that the fintech look at that situation and says, okay, what do you think they are going to attack? The loan at 2.5% or the Forex commission at 3% for exchanging dollars? Of course, they go and attack the Forex commission. That's where everybody comes. That's where TransferWise goes. And they attack that. So you as a bank, what you need to do is, okay, you know what? I'm going to charge 0.5% for the Forex commission. That's the way it is. That's how much it costs, no more. But then, in order to have a productive relation with this company, I cannot do the cross subsidy. I have to charge 5% in the SME loan, because be clear, the fintechs are not going to go to the loan because that's shitty business. They want the good fee business. Okay, so one of the things banks have to do is unbundle the cross subsidies that we have in the bank. So if the Forex business is cheap and low margin, charge low, because if not TransferWise, you're going to kill it. Everybody's going to kill it. On the other hand, if you are charging too little on the lending, you have to put your price up. So that's part of the game. And obviously, the fear of cannibalizing your Forex business goes to do nothing and letting that fail for TransferWise, for everybody, for whoever. But the answer has to be cut your arm, raise prices where you have to raise prices, and cut costs.
Well, José Luis, we have one question which is really related to what you just said, which is, doesn't a simple copy with pride strategy work to compete with fintechs?
So say it again, Marcos. I didn't.
Doesn't a simple copy with pride, just copy in a decent manner, strategy work to compete with fintechs?
Well, I think there's a value on copying. It's not only copying, but it's a value of copying. At the end of the day, let's imagine that there are 100 startups that try to launch a product. 90 of them fail, 10 succeed, and they have 10 new products. Okay, and they work and they have success. Okay, as long as the banks could do a quick copy of those products, they will save 90 fintechs that blew up. And just they just say, okay, these guys are doing well, we'll copy that. Now, it's not only copying. You have to copy. You have to be quick in copying. You have to evolve. You have to use the data. You have to do a lot of things with that. But the strategy of copying, the second, how you say, the advantage of the second entry advantage is pretty good. You know that Microsoft has not really been an innovator, has been a quick copy company. So if you are good at copying quickly and improving and continue the pace, and you are big and you have the customers, it's a huge advantage for the banking sector. But we as a banking sector, we are not doing that completely well, I'd say. Okay. So let's go to the, I understand there's no more question for the moment. Let's go to the last page, which is the other examples I have, which is Wirecard. Wirecard was a very successful on the paper company, startup, fintech, merchant acquirer, global payments, so darling of the market. Well, one of the things that happen with fintechs is that sometimes their controls are not very good, and therefore sometimes there's fraud. It's more difficult that you have fraud in a bank, but I mean there was an organized fraud apparently. Having said that, they have good assets. So we bought all the teams, technology of Wirecard in Europe in order to launch our merchant acquiring business in Europe in a digital world. No? So we are putting Wirecard with PagoNext. Remember I explained with PagoNext, we're putting that, trying to build Euro and a merchant acquirer for the Americas, for Europe, online e-commerce capable. No? Well, and actually we bought it at the beginning of last year. Sorry, at the beginning of this year, end of last year. We pay a price of 100 million for a bunch of people, software, hardware. So we bought a call option on perhaps we could rebuild part of the business, no? And for the moment it's working. So in this case, it was not even an organized business, but a bunch of teams and software to connect with our own business in order to accelerate the transformation and digitalization of PagoNext. No? Anyway, that's another example. So, guys, this is how we work with fintechs and compete with fintechs and cooperate with fintechs. And we know a lot of things are difficult to compete with them, but we have as banks a big advantage, which is we basically own all the clients in general because we own the current account. But definitely the banks have to become a little bit fintechs in order to compete. No? I also, with my another hat, because my other hat is the CEO of Santander Consumer, in which we are the biggest consumer finance company across Europe for auto loans and for direct loans and loans through retails and white goods, etc. It's very important when we are digitalizing very fast. And now with the support of Open Bank, we are having a lot of digital innovations there. And we are trying to combine the capacity, the technological capacity, customer experience, data savvy of the fintechs with the capacities of an established bank, with the funding capacity of the established bank, with the risk know-how of the established bank. No? And if we put those things together, it's actually very difficult to beat by anyone. No? And let's see where we go.
We have one last question. How do you think incumbent banks can embrace the platform business models based on the so-called network externalities, such as the fintech and big techs have?
Okay, I'm not sure I understand the question.
The network externalities.
But first of all, the platform business. I understand that what the person that made the question means by a platform business is a place where there's suppliers of things and demanders of things. You are in the middle and you run the platform. Like Amazon, no, it's a marketplace at the end of the day. So people and you as the manager of the platform don't have any capital, you just charge a fee. No, well, that's a dream of the banks, but unfortunately, in order to do that, we need to be able to sell other people products. So I envision that, this is open banking and all this theory about selling other people. We obviously sell other people products in assets under management, in mutual funds, in insurance products, but for current accounts, for mortgages, that tend to be commodities that are difficult, no? But definitely I envision that there will be, who knows, perhaps some Amazon of this world will decide, well, I will not be a bank, but I will distribute financial products to my customers because I have connected 20 banks and my customer will get the best product from each of the banks. No? So perhaps I envision more platforms outside of the banking sector. In the banking sector, we are trying to do platforms at relatively scale. For instance, we have a platform in which we offer the best in something like a place where you can look for the best insurance company for your car, no? And things like that. Whenever we are not a provider of a certain product, we tend to be a place where everyone can have their product and sell, but in niches, in small niches, no? So net to tell you, I don't think the banks for the moment are well positioned in that platform, if that's what you meant about platforms.
We have one last question, I would say, which gives a hint about the future. What's the next big trend, in your opinion, in fintech that will give another big impact to the incumbent bank?
I love to know, so I could invest. Let me think. To tell you the truth, you have a lot, but it's true that perhaps the next, there are a couple of fields which is not super new, but one is a lot of fintechs trying to find out how to do credit rating and rate customers better than banks with a different type of data, because we banks have a lot of data, but it's very financial. So there's a lot of people trying to work if they can beat the banks in rating customers for risk basis, because if they can beat the bank for risk basis, then they could be more efficient because they have lower cost. If they can underwrite loans more efficiently than banks, then banks are stuffed, no? So that's one. And I think a lot of people is doing inroads and using data very intelligently. You know, I also think that in that road, the banks are also advancing. So let's see what happens. So that's one area that I see. What else? Open banking, perhaps for banks to offer third-party products, that's still to come. And I don't see the banking sector convinced. And then a third one, which I think has been talked for a while, but there hasn't been too many applications up until now, is the blockchain technology. And the blockchain technology now is exploding it's exploding a lot of application in the financial sector. Blockchain for custody business, blockchain for custody business is a killer application. The blockchain for trade finance within a small number of banks that have assets and liabilities within each other. Eventually, you could use blockchain to do current accounts. No? So those three perhaps are the ones that I would see. And I look forward listening to suggestions from anyone here that knows more. No more questions?
I'm sorry, I've lost a little bit of my Wi-Fi now. I think we have done for the questions, and in the meantime, it's high time we finished
Okay.
so I think it's a good moment for us to conclude, and so thank you everyone for attending. José Luis, thank you very much. It was wonderful to listen to you and to have this insight on this issue. And thank you again for joining forces in this sort of events between the Spanish and the Portuguese society. It's always a pleasure. Our audience is always very keen on asking tough questions, which is good, and challenging questions. So thank you everyone, and see you again soon.
Thank you very much, guys. Really appreciate it.
Bye.
Thank you. Thank you well. Cheers.